Hello again. You are watching Today on eNCA DSTV channel 43 with me, Dan Moyane. Now, the 50 basis point increase in the repo rate yesterday was another hammer blow for consumers. Now, property owners in particular will be feeling the pressure after 10 consecutive rate hikes over the past 18 months. Now, the prime lending rate is now at 11.75%. So what does this mean for those who already own property and need to pay the spiraling bond repayments, and for those who want to become property owners but may be deterred by the high interest rates? Let's get some views now from Better Bond CEO Coetzee. Carl, good afternoon. Welcome to Today, and thank you very much for your time. I mean, to say it's tough times indeed, if you've got credit of any sorts, including a bond, is an understatement, because it's really been a tough 18 months.
Dan, yeah, good afternoon. It has certainly been a tough 18 months. And, this interest rate at this level, it's the highest we've seen it in 14 years. So definitely consumers are struggling a lot more than what we used to. So that disposable income is becoming less and less and less. After yesterday's increase, which, we were hoping were not going to be 50 basis points, but, we understand why this happens. Consumers are now, for instance, for a R1 million bond, if they have a bond right now, they're paying around 350 Rand more for their bond. And that's taking some money out of their pocket. So it's definitely a tough time for us.
And if you look at that 350 Rand more now, it's been building up from over the last 18 months. I'm sure it's a couple of thousand of rands, if not more.
Correct, Dan. The cost of credit in the past 18 months have increased around just over 60%. So, you're paying very easily on that amount, on that R1 million bond, more than 3,000 Rand more. So certainly, we've had some tough times on that. Yeah. But we must also remember we come out of a very low interest rate cycle. So, we do expect it to go up. And I think the silver lining, if I can say, is that we do expect this interest rate cycle to be very close to the top end of it, if not already.
How so, Carl? Because just yesterday, I'm one of the many South Africans who listened carefully to the governor, Lisisha Kanyako. He was saying, no, we were doing the normalization over this time after the pandemic and stuff. Now we are doing the restrictive in terms of our monetary policy. So this is just a start of the restrictive one. So how are you confident that this might be the last of the hike cycle?
Yeah, Dan, when we don't have a crystal ball, we're definitely seeing, inflation. We've seen the inflation numbers coming down, and that's a good indication of where the interest rates will be going. Unfortunately, the weakening of the rand has certainly, not bode well for us. So we'll see what happens in the future. Certainly, all the economists we're speaking to around this is predicting towards the end of the year that we should see these rates coming down. Okay. So unfortunately, there's so many factors that play a role in that, but we could only be hopeful at this time.
Okay, so you said there could be a silver lining, which you gave a little bit earlier, and which is the good news. I mean, we have to talk about that this is likely to be the last increase for a while. So let's keep our fingers crossed, and the things being what they are with our inflation, let's hope so. But the food inflation is not great, though. I mean, it's at a 14-year high at 14-point-something%. It's not helping, and the power cuts are also not helping. But we'll keep our fingers crossed. Now, if you have a home and you're a home buyer and you can afford it, what advice would you give, Carl?
Yeah, Dan, what we're seeing the property market still being quite buoyant. If we look at pre-pandemic levels, we sort of sit in the same range than what we did pre-pandemic volumes. So we can see there are still consumers buying. The trends of those consumers that are buying are quite different. So obviously, we see the ratio of first-time buyers being less than what we saw, at just post the pandemic. And my advice to consumers are really one of get pre-approved before you go out buying a home. So know and understand exactly what you can afford. And you'll be surprised that you'll still be able to afford a bond potentially. And we can see in our South African banks, the banks are still lending. We're seeing 100% bonds still coming through. So from that point of view, if we look at the silver lining in that's also quite good for consumers at the moment.
Okay, now options that are available if you're servicing a bond currently, I guess the main one is to, if you're able to, you continue paying.
Dan, that's very important to continue paying your bond. Obviously, for your future credit and for future, potentially, downsizing or upsizing in your home, your credit score is incredibly important. So, my advice and my plea to consumers are, please continue to pay your bond. If you are struggling, please look at your budget, see where you can save. Phone your bank even if you are struggling and see if they can help you out, but continue to pay your bond, because that's critically important for you in your future and what you want to do and how you want to expand potentially. So keep that credit score safe during these hard times.
Yeah, and I mean, as you say, you at Better Bond, property is a long game.
It's a long game, Dan, and we've seen this over and over. Interest rate cycles go up and down, and we know we come out of some very good times, but we've seen it over the years. I mean, when I was a much smaller boy, I remember interest rates being in the 20%. So luckily we're not there yet, and we definitely don't expect it to go there. But it goes up and down, and we just have to navigate some of these difficult times where we are. But yeah, as I say again, definitely some upside for us, I think, in the future.
Okay, thank you very much. Let's look forward to that upside. Better Bond CEO Coetzee, just on the back of that 50 basis point increase in the repo rate announced yesterday by Reserve Bank Governor Lesitsha Kganyago.